Good evening. This is the Elliott wave update for the S&P 500 for Wednesday, January the 5th, 2022. Interesting day today. As I have been in review of what's currently been taking place in our markets, I am reminded of when the last Fed meeting and during the chairman's press conference, how it was announced that the Fed would be tightening, tapering, whatever you want to call it, interest rates multiple times in 2022. Today, when the minutes from that same meeting were made public and the same news was revealed, the markets dove south. They just started to sell off. So to me, it was almost a classic, buy the rumor, sell the news. I don't know how else to explain that, but it was kind of funny to me. I'm sure if somebody was long waiting for better news, they didn't consider it very funny. In any case, we were more prepared for some downside today, and that's based on leaving off last night. I had put a minor wave one up at this high at 4,808, which suggested that we would be involved in a wave two correction. And where could that wave two go? We discussed first was 46.98. Came, hit it, slid through it. Now working its way back towards it. But in essence, I had also gone over and explained that the second wave, even on a minor level, can retrace all or nearly all of wave one. So our no break line comes all the way down here at 48.08. Excuse me, not 48.08, 45.20. 48.08 is way up there. Excuse me as I read my numbers wrong. So 45.20. Now, what really kicked the S&P into gear today and sliding lower was again something that I'm going to bring to our attention. That when the S&P broke the hourly 200, it slid. And I'm going to open this up so we can see. Okay, let's try that again. It doesn't want to do it. How about that? Can you do it? Nope, you're not going to do it. All right, one more time for the Gipple. Thank you. So as we can see, when it broke, it accelerated. And then when the news came out, it accelerated even more. So this was the 2 o'clock hour. News comes out, it accelerates. The acceleration continues right into the bell. Now, I need to change these because I think for some reason, nope, they're coming out as a candle. That's perfect. That the market just slid through support. And then when it got down into here, it really made it pretty easy. Once it broke and started to slide, but it broke below 47.40, it was pretty clear that our next support was at 46.98, and the market just started heading straight for it. Exceeded it, which gets me to believe that what it really wants to do is continue to sell off, and then we have 46.64. We have 46.30, we have 46.05. Those levels are all still in play to complete wave two. What does wave two need to consist of? It needs to consist of 5 waves. I mean, of an ABC, but the C is 5 waves. So this could be A, that could be B. And then we have 1 and we have 2, and we're dropping in that third wave. Now, and please excuse me for that gawk there, because a second wave will consist of an ABC. But I, in my mind, was thinking, well, the A and the B is already done, and so we're in the C wave. And that is exactly pretty much what I'm saying. So we get A, B, 1 of C, 2 of C, we're dropping in the 3 of C. And if this completed, this low, as we start the Globex session, the market did drift down to 46.81, almost 81.75, and now is rallying back up. If I'm looking for a fourth wave, we can throw up some initial retracement levels and see what we get. we get the possibility that it could rally back to 47.07. It's going to be right there. And then we have 47.22. Now, I would think that it's going to be held at that 382. But from where we were to where we are, that's a pretty decent rally. So we have 22, about 27, almost 30 points, 38 from that low. And that would be a decent rally. And it should come up A, B, C. So it should be an A, a B, and a C. Very similar. This is now A, B, C. The fourth wave is also going to be a three-wave structure. So those would be the resistance levels going back up. A fourth wave should not, I mean, it can come all the way back up. It just can't cross 47.65. But I'm not going to be expecting a lot, because I do think between now and by the time we open, the pressure is going to be on the sell side, at least for the US markets. Again, we'll see what happens in Asia and in Europe as they take their turns in putting their 2 cents into what we should or should not look like. And then again, balancing it out against how their own markets are trading tomorrow. So this is what I am looking for. I am looking for the completion of the C wave. That would be the completion also for minor wave 2. I believe that we will find that support for minor wave 2. Let me take this back out again so I can take a cleaner look. At the resistance up here at 47.06.07 up to 47.22. That's a fairly decent rally off of that low, bringing it all the way back up, and that would be a wave 4. So again, 1, A, B, 1, 2, and then we start. This looks like it may be 3. I like the fact that it's rallying up, and then we rally higher. They're going to find some hiccups at that 30-minute 4, and that's at 4,700. Then we have 47.07. Then we have the 8 at 47.18, and then we have that 382 right above. So basically, the 4 and the 8 will also contribute to containing rally attempts. So the bounce we feel is necessary. Elliott certainly calls for it, but now we just need to wait and see, will it come in super shallow, or will it rise up and find some resistance back up here towards this 8? Coming back down, then if that completes wave 3, right? So we have A, B, 1, 2, 3, we get a 4. That 5th wave would be expected, in my opinion, to come at least down to 46.64. It should definitely break the low we just created in the beginning of the year of the Globex session at 46.81.75 and continue to fall, hopefully to 46.64, but we cannot discount or give up the fact that it could come all the way back down to 46.30. Again, moving back out to that hourly chart, we have all this room. So if it comes all the way down to 46.30, it still has additional room, and it still can be a wave 2. It just cannot break 45.20. If it breaks 45.20, then, as we discussed yesterday, this is not likely minute waves, and this is not likely minor wave 1. It could be intermediate wave 5, and all of these change into minor degree advance to complete intermediate wave 5. So I'm still quite satisfied with the count as it stands, but I'm giving both sides of that picture, because in all honesty, if the market really does start to collapse from here, then we have to be able to change that picture so that we have a clearer understanding of what is taking place. And it doesn't change the fact that I'm continuing to view that we have potential to have a very solid, strong rally back up to additional new all-time highs. But the market will tell us if that's still in their realm of possibility, or is it off the table because something else has happened and the market is now going to decline with more strength acceleration, and purpose. So bearing all that in mind, the count can change, not the 4, and not what would change is this would get reverted to an intermediate level 5, and then but it's going to have to break here 45.20 and then some to put that into place. Okay, so for tomorrow, I think we get a little bit of a rally. We have our markings. We have 47.07, 47.22, and then an additional move lower. We have supported 46.64, 46.30, and 46.05, which basically takes us down to 4,600. I cannot discount the possibility that the market could continue to drop below 4,600 and end up closer to 45.20. But the market's going to let us know, and the market's going to tell us. So continue to trade what's in front of you. Continue to trade accordingly with the moving averages, using the Fibonacci support levels and the resistance levels as they should, but understand what it means when they're broken. That if this is broken, that's where it's going. If that breaks, this is where it's going. If it continues to break, it does change the picture, but at least that we're going to have to wait until that happens. That doesn't mean that we change the way we're trading. If the market is going down and continues to break support, well, then we just continue to sell it. You play it accordingly. Now, one last thing I want to include in today is I want to take a look at the moving averages out on the daily chart, which is our next big focus in terms of direction and weakness and or strength. So we found that in the NASDAQ, the market had now displayed twice serious weakness. So here we have in the daily, the S&P has come down today and broke the 20. It accelerated a little bit, but it was already accelerating when it got there. I just broke it and kept right on going. So I think that what it does show us is first of all, that's a very large negative bearish engulfing bar. And the fact that it broke the 20 adds another layer of weakness for the S&P. Now, what's up next? If it comes down and it breaks 46.42, it's going to be another layer of weakness. And that would suggest at least 46.30, if not lower. So then where do we have some true pain if the market really starts to collapse? Unfortunately, once it breaks 45.20, it's going to be fairly clear that this might be the highs, but the next major point of pain and further strong acceleration through weakness would be if the S&P on the daily chart breaks the 200, the daily 200. And there's a lot of space in between. But if we do get a severe collapse here, then yeah, that's where they're going to go. Also, if you have the ability to have previous value area highs and lows, previous points of control in the market, previous value areas that have not actually been taken out by the market or recognized, understand that when there is massive selling going on, what a lot of those sellers are looking for is that next level of value. So they have it on their charts where that exists, and they may just sell down to that level because that's where they're actually going to get, where they're going to get the size they need done. So bear that in mind as we're sliding. Where can a market find support? If you've got the ability to show previous points of control, value area highs and value area lows, that is a really good indication, and that should still remain on your chart if it wasn't surpassed, if it wasn't dealt with when on the days that they were put there. So just keep that in mind. I'm going to kind of leave it there. Ask that we continue to trade smart, trade using your moving averages, trade using the Fibonacci. We added a layer of Fibonacci here so we can get where we think this corrective fourth wave will come up to. Again, upside, if it breaks 47.22, breaks 47.34, breaks above the 8, breaks 47.40, and starts breaking all these resistances on the way up and ends up back above the 200, the hourly 200 at 47.55, that would be pretty serious. That would be, we're just taking all this back and would give stronger credence to wave 2 being complete. That's where I'm going to leave it. Our next update will be on Thursday, January the 6th.